Federal Reserve policymakers began their two-day meeting on interest rates today. And while many expect the central bank to loosen monetary policy tomorrow, not everyone agrees. Steve Liesman breaks down the latest great rate debate.
Most in the market agree with what the Fed will do with monetary policy tomorrow. That is, cut interest rates. But they disagree on what the Fed should do. 98% of the respondents to the CNBC Fed survey see a rate cut, and nearly all say it will be a quarter-point rate cut. But ask what the Fed should do, and that's where there's a split. About half say the Fed should not cut rates at all, mostly because the economy's in pretty good shape. John Qatar, Chief Investment Officer at Ardent Asset Management, writes in response to the survey, quote, "Objectively, the case for a rate cut is not obvious. The economic data has simply not been weak enough, and the absolute level of rates is already low." More economic data today showed strong consumer confidence along with healthy growth in personal income and spending. It's not the kind of economic data you typically see when the Fed's cutting rates. And the survey showed most expect the economy to slow, but not much slower than had been expected when the Fed was still raising interest rates. Growth in gross domestic product seen in the survey falling at 2.3% this year from 2.5% in 2018. It slows further to 2.1% in 2020, but that's roughly in line with most measures of what the potential of the economy is anyway. Those supporting the cut point to the uncertain effects of the global trade war and the low inflation rates in the United States.
I think the case is probably stronger. Inflation really does appear quiescent. There's uncertainty about where the economy is going to go in the future. The risks of a cut seem to me to be lower than the risks of staying where we are and risking a tip into recession.
That would make the Fed rate cut an insurance move based not on the data, but on the fear of what will happen in the months ahead, for example, with events like Brexit. And insurance policies, well, they're always judged against the cost and the risk. For the Fed right now, the cost of the insurance looks cheap compared to the risk of recession. For Nightly Business Report, I'm Steve Liesman.